Hi everyone, this is episode 3. This is going to be a more lengthy episode because I'm going into in depth of all the changes for 2020 that I have to share with you guys that is very important. Okay, so let's just go ahead and dive right in. I hope to not lose anyone's attention and not to exceed 30 minutes. Okay, so if I'm talking really fast, make sure you drop a comment with a question or email me if you need some additional one-on-one help. I'd be more than happy to help you. Okay. All right, so 2020 income brackets. There are 7 marginal tax brackets that are indexed annually, and they range from a low of 10% to the highest bracket of 37%. Okay. Let's see here. The IRS will apply a base tax to each bracket for each filing status. The percentage applies to each dollar amount above the taxable income and is addition to the base tax for that taxable income amount. Excuse me. All right, so the Tax Cuts and Job Act's legislation, I hate that word, has essentially removed the penalty, the marriage penalty and the divorce separated penalty, except for 2 top brackets. And those brackets are, let's see here, the brackets for married filing joint is essentially double the single rate as it should be, except for the upper amount in 35% and 37% brackets. Okay, so those 2 brackets of 35 and 37%, there is a marriage penalty and a divorce separated penalty. All right, and if you want to know what those income brackets are, you can go to the IRS website and put in 2020 income brackets, and it will pull up the table for you. Okay, all right, let's see here. Trying to make sure my camera don't move. All right. For 2020, there is still the temporary reduction of the personal exemption to 0. So there is no personal or dependent exemption. All right. This is expected to return in the 2026 tax filing year unless something changed by Congress before that time. All right. The Social Security wage base. Okay. 2020 Social Security wage base is $37,700, an increase of $4,800 from 2019. Okay, the 2020 kitty tax exemption threshold is $2,200, so there is no tax due for amounts under the threshold. I'm sorry to keep moving my camera, but I'm trying to get the best viewing. This is all new to me. I'm gonna have me a professional video done sooner or later, I guess. I'm sorry, y'all. I'm very sorry. $2020 capital gains tax rate. Okay. The short-term capital gains rate is based on an individual's effective tax bracket. The long-term capital gains tax treatment have their own rates and thresholds for 2018 through 2025. Okay, and it is not tied to the ordinary income bracket. So you'll have to look up the income brackets on irs.gov for the sake of timing of this video. And again, if you have any questions, I can go over that with you. Okay. Net investment income tax, NIIT, the new tax law retains the 3.8% NIIT from 2018 through 2025. The 3.8 net investment income tax, also known as the Medicare surcharge tax, is in addition to the capital gains rate. Okay, for those that fall above the threshold levels that are indicated in the capital gains rate table I told you to find on irs.gov. Okay, for 2020, the adoption credit is up to $14,300. This starts to phase out when your income exceeds $214,520. Okay, the 2020 child tax credit is a $1,400 refundable credit amount. That's the additional child tax credit. The 2020 lifetime learning credit, maximum adjusted gross income in excess of 59,000 for single filers and 18,000. I'm sorry, 118,000 for married filing joint. All right. The 2020 earned income tax credit. Okay. This is a very important topic, so I'll spend a little bit of time on it. All right. Now, if you have no qualifying children, you may still qualify for some earned income credit. That maximum amount is $538. Okay. For one qualifying child, the maximum amount is $3,584. With two qualifying children, the maximum earned income credit is $5,920. And for three or more qualifying children, the maximum amount is $6,660. Okay? Now, to touch on that just a little bit to help people understand that your adjusted gross income has to be within a certain threshold to qualify for earned income credit. Okay? And earned income credit is targeted towards low income households, unfortunately. So when you start exceeding income over, $50,000, $60,000, your earned income credit eligibility chances are very slim to none. And a lot of people don't understand that. They just think, well, I have three children, so I should be getting back $6,660 in earned income credit alone. It doesn't really work that way, okay? Your adjusted gross income is taken into consideration once all of your deductions are done first, and then come the credits, okay? I can help you with further information on that as well. All right, 2020 investment income must be $3,650 or less for the 2020 year. Okay. Let's see here. Refundable credit, qualified health plan coverage. There is a refundable credit for qualified plan health care coverage. 2020 rehab expenditures treated as separate. New building, $7,100. Low income housing credit. This is for people that offer low income housing credit. Okay, it has rental income. So that is a calculation of the greater of 2.8125 multiplied by state population, or you can use the number 3,217,500. Okay, this is for those business taxes. 2020 employee health insurance expense of small employers eligibility is $27,600. The 2020 AMT exemption amounts are posted at irs.gov. Those have changed for 2020. Okay. The 2020 educator expense deduction is $250 for qualified elementary and secondary school teacher expenses. The standard deduction has been increased across the board for a single, married filing joint, qualifying riddle, head of household, and married filing separate. Okay. You can also find this standard deduction table at irs.gov and type in 2020 standard deductions. The 2020 cafeteria plan, 125 health FSA limit is $2,750. That's up $50 from 2019. That's a lot of changes here. Okay. Oh, let's see here. The dependent care FSA maximum is $2,500 and is set by statute and not subject to inflation. Okay. 2020 qualified transportation plans, transit and parking are both $270. The 2020 interest exclusion on U.S. savings bonds for qualified higher education expenses. Phase out maximum adjusted gross income is $82,350 minus $97,350. Okay, that's for I'm sorry, I didn't mean to say minus, I meant to say through. So let's repeat that. Phase out thresholds is maximum adjusted gross income of $82,350 to $97,350, and that's for single and head of household filings, and $123,550 up to $153,550 for married filing joint. 2020 qualifying relative dependent gross income limitation is $4,300. Okay. 2020 179 expense deductions, $1,040,000 $1,040,000. Okay. SUV, 25,900 max. Phase out threshold is $2,590,000. Long term care premium disability limits. Let's see here. Qualified premiums are deductible on the Form 1040A. Itemized deductions under medical and dental expenses, and this reverts back to the 7.5% of your adjusted gross income. So if you have medical expenses that exceed 7.5% of your income, you are able to deduct those off of your itemized deductions. Oh, let's see here. 2020 interest on education loans deduction is $2,500 with a phase out maximum adjusted gross income between $70,000 and $85,000 for single and head of household, and $140,000 up to $170,000 for married filing joint. 2020 qualified small business threshold, $26,000 in gross receipts last 3 years and not a tax shelter. $2020 excess business loss threshold is $259,000 for a single filer and $518,000 for married filing joint. Covered expatriate exclusion is $171,000. Average 5 years of annual net income for 2020. 2020 foreign income exclusion is $107,600. The gift tax annual exclusion is $15,000. Okay. Gifts to non-citizen spouses is $157,000. Gifts from foreign persons is $16,649. Property exempt from IRS levy, personal $9,690, business $4,850. Wages, salary, and other income exempt from IRS levy, maximum is $4,300. Failure to file a return, lesser of $350 or 100% of the tax due. So if you don't file your return, the penalty is $350 or 100% of the tax due. 2020 attorney fee award limitation is $200 per hour. And 2020 taxpayer penalty for serious delinquent tax debt, $53,000 in revocation or denial of passport. So if you owe over $53,000, they're going to revoke or deny your passport. Qualified small employer HRA maximum reimbursement is $5,250 for single and $10,600 for family. All right. So some of these things you may be wondering, I don't know what that is. I don't know what that means. Well, that's why I'm spending time making these videos to try to go over the highlights and then in depth of what's actually going on. So I hope that if you have questions that you will drop your questions so I can answer them for you to give you a more in-depth answer. What I am going to do is I will go a little more further into detail, highlighting some of those changes that I did go over with more detail. Looks like I'm under 30 minutes. I'm well under, actually 15 minutes. So let's point out a freebie here. Yeah, this is a good one. Okay, so because of COVID, they added that you can withdraw penalty-free up to $10,000 from a qualified 529 plan to pay down qualified student loans with only 2 conditions. Okay, those 2 conditions is the $10,000 maximum is a lifetime limit for a beneficiary and each sibling. This means a family with 2 children can take a maximum of $20,000 to pay down their student loans. Okay. Second condition, plan holders cannot claim any student loan interest deductions paid with this money. So if you took out $10,000 or $20,000 for $10,000 for each child to pay down their student loans, you cannot claim any of the student loan interest that may have been paid with that withdrawal from your 529 plan, excuse me. So that's a, I guess, a freebie to give away for time's sake. And so since I gave away that, which is on student loans, let's see here. So tuition and fees deductions has been extended through 2020. So qualified tuition and fees are deductible on Schedule 1 of the Form 1040. The maximum deduction is up to $4,000 of qualified higher education for your spouse or your dependent children. This deduction is retroactive to 2017. So you can go back to your taxes, and if you didn't qualify to take a deduction then, because of the different changes that were put in place, and they were retroactive to 2017, some of these changes were retroactive, not all of them. You may be able to file amended return and get a little more money back. Maybe you owed some money from 2017. So that's another deduction. I'm sorry, freebie, not deduction, but it is a deduction, but it's a freebie of information that I won't have to go over next time. Okay. So the only exclusion to the tuition and fees deductions extended through 2020 is that the deduction cannot be claimed if the American Opportunity Tax Credit or Lifetime Learning Credits are claimed for the same student during the same tax year. Okay, any tax-free educational assistance received in the same year reduces dollar for dollar qualified education expenses eligible for the tuition and fees deductions. However, the tuition and fees deduction it will not be impacted by any 529 plan distributions. All right, so the maximum deduction for let's see here, is $4,000, and that is less than 65,000 income. So for single filers with less than 65,000 in income, and for married filing joint, incomes cannot exceed $130,000 for 1 year. Okay. Alrighty, so I hope that was informational for you. Again, drop me any questions. Visit my Facebook page at facebook.com/KJD Business Solutions. Or you can call me 832-994-4409. You can text that number as well. I do have a mobile app, as I mentioned before. I'd be more than happy to send you a link if you want to get started. Thanks.